Well, thank you for joining me today. My name is Mark Montini, and my company is the Montini and Company Tax Advisory Group. And in the next 10 to 15 minutes or so, we're going to talk about what's really the difference between a financial planner or a financial advisor and which is best for you. So real briefly about us, we are a tax and financial planning firm. We're a bit of a one-stop shop for all of your planning needs. I am a licensed fiduciary and an independent financial advisor. I've been in financial services now for about 28 years. What we specialize in as a company is we specialize in tax reduction strategies for people in retirement. We build long-term sustainable retirement income plans for people. We do manage assets. That's part of the financial planning side of things. And we do taxes. We do taxes for individuals. Our tax returns start at $175 and they go up very modestly from there, depending on the complexity of the return. So what we're going to be talking about today are the different types of advisors that are out there and what type of licenses they may have, what type of specialties that they may have. So we're going to talk about being a financial advisor versus being a financial planner. We're going to talk about what it means to be a licensed fiduciary and what is an RIA or an IAR. We'll talk about what a stockbroker does and what an insurance-only licensed agent will do. And then we'll finish with what's the difference between an independent advisor versus a captive advisor. So why use a financial professional? Well, first off, we're going to be here to help you manage your portfolio. And we're going to do that based on the phase of your retirement that you are in. And I will talk about that in a little bit. Most financial professionals are going to have a clear knowledge of taxes and hopefully have a desire for tax reduction and or tax elimination. We're going to help determine if there's an insurance need that you may have, if any. We're going to discuss managing stock market losses. And then we're going to help you develop a retirement income plan. So, financial planner versus financial advisor. Well, generally speaking, a financial advisor is going to focus more on wealth management, where a financial planner is going to take that more holistic approach, including taxes, income planning, insurance, and so on. We're both are going to act in the capacity of being a fiduciary, and we may have additional certifications such as a certified financial planner or a CFP. Now, what does it mean to be a licensed fiduciary? Well, we follow what's called the fiduciary standard. And what that fiduciary standard does is by law, any recommendation that a fiduciary makes, that recommendation must be made in the client's best interest. So in essence, we're sitting on the same side of the table as you are, not on opposing sides of the table. We're in this together. In order to become a licensed fiduciary, you're going to go through the state examination and acquire your Series 65 license. You then register both with the state and the Security and Exchange Commission. Some financial professionals may not necessarily be fiduciaries. So you want to make sure you ask that question and do a little bit of research. So investing with the fiduciary standard. Okay, typically when you're working with a fiduciary and they're helping you to manage your retirement nest egg, you're going to get tactical money management. Okay, what tactical means is action. That means somebody's watching your money on a daily, weekly, monthly basis, and somebody is adjusting the holdings that you are invested in based on what the economic environment dictates we should be invested in. Now, passive management on the other side is going to be a more of a buy and hold type strategy. And that's not a bad strategy if you have time, right? If you're in the accumulation phase of your life, where maybe you're just simply contributing to an employer sponsored plan, and you're trying to build up that retirement account. A buy and hold strategy, if you've got 10 to 20 years, can work very well. And that buy and hold strategy would basically be investing in a very diverse portfolio that includes assets that are non-correlated, meaning one goes up, the other's going to go down. The other one, then the next year it switches. And this year, this one's up and this one's down. But over time, it's still a good proven strategy. In retirement, we don't have that time. In retirement, we need to be very responsive to what's going on in the environment, because 1 or 2 down years at the beginning of your retirement could significantly impact the sustainability of your retirement income. Here's a bit of an example, okay, of why we want to make moves based on what the economy dictates that we should do. And if you've seen any of my other little miniature webinars, you've probably seen this slide before. But let's pay attention here. What this chart is showing us is by asset class, the investments listed at the top are the top performers for any given year, and at the bottom is the worst performer. So let's just look at the purple box and look at this is emerging markets as an asset class. Well, 2008 had a pretty bad year. 2009 had an amazing year. 2010, not bad. 2011, really bad year. The next year comes roaring back again, and then it has an awful year again, and so on. So you can see how we need to make proactive moves based on what the economy dictates we should be invested in, to avert some of these short market corrections that are perfectly normal and happen. But we want to be ready for it, and we want to have a game plan and know where's the market going and where's the best place for us to be invested at. Now, as a licensed fiduciary, okay, you can be an investment advisor representative, an IAR. Now, this is what I am. And we can be independent, or we can be an investment advisor representative through a captive organization. And I'll be talking about what that means in a little bit. Again, we're going to be registered with the SEC and the state with our Series 65 license. And what we're going to do is we are going to represent multiple investment advisory firms. Okay, that is the RIA. So for example, I currently represent 5 different investment advisory firms. Each firm has multiple portfolios based on what we're trying to achieve. It could be growth, could be safety, could be income, could be a combination. But as an investment advisor representative, we can bring an additional layer of diversification to the mix. We can be diversified by asset, but we can also be diversified by portfolio management. Again, just like the economy. This year, this portfolio manager did really, really well, and this one did okay. Then the economy shifts. Now this one does really good, and this one does okay. So by adding that diversification of multiple portfolio managers, generally we can generate a more consistent return over time, which again, in retirement is something that we're really chasing. We don't necessarily need to be a cowboy and try to double your money. Making sure that money is safe and getting a good, fair, consistent return is ultimately what we're trying to achieve. Now, as I said, the IAR represents the RIA, the Registered Investment Advisor. Now, this is the firm or the money manager. Okay, they are going to oversee the compliance and the suitability of the investment advisor representative. Again, the RIA is going to be registered both with the state, but once they accumulate assets in excess of $100 million, they then have to register also with the Securities and Exchange Commission. The RIA is going to typically work on a fee-based model. Now, I'm in favor of the fee-based model because the fee that you're going to pay is going to be locked and set, and that's never going to change. So if the RIA wants to make more money, they have to grow the asset. If they lose money, now they're going to be making less of a fee. So they are incentivized to grow the asset. As the investment advisor representative, as me, the IAR, I am then watching the RIA. So the RIA is watching your money on a daily, weekly, monthly basis, in reacting and making proactive moves based on what the economy is doing. But as the investment advisor representative, I'm watching the RIA, because if I want to make more money, I've got to have them grow the asset as well. So the fee-based model does work well, in my opinion. Now, the stockbroker is, we've all probably seen who stockbrokers are, and what their primary role is going to be is to execute trade orders. They're going to have typically more than one license. The Series 7 is probably the most important, but they could have a 63 or a 66, or they could become a fiduciary and get a 65 as well. Typically, the stockbroker's got to work for large institutions or for high net worth clients, and they may be compensated through fees, or they may be compensated through commissions through the stock trades. The insurance licensed only financial professional also holds an important place in this world. What the insurance licensed agent is going to be doing is he's, number one, going to be licensed through the individual state that you're in and regulated by that state. He's going to be typically offering annuities or life insurance or long-term care and even health insurance or Medicare supplements, compensated through commissions. And they may be independent, or they could be working with a captive institution. But they won't be operating under the scope of being a fiduciary unless they get the Series 65 license. If you want to learn more about annuities, right? Annuities have become really popular, especially with the volatility that we've seen here for the last 18 months or so. I do have a little mini webinar you can go to. You can go to montinico.com/webinars, and you'll find my little, I think it's 14 minutes on understanding annuities and seeing where annuities may be a fit, where maybe it'd be in your best interest to just take a portion of your portfolio for the annuity while maintaining other sufficient liquid assets. But it's educational, and please go on there and give us some feedback. Let us know how you like that. Now, I mentioned before, an advisor can be a financial professional, can be a captive advisor, or it can be an independent advisor. Now, with a captive advisor, okay, they're typically going to work for a large insurance company or a large big box brokerage company or a large bank. They typically are going to be limited on the investment products that they can offer to just the proprietary products that these larger organizations put out on their own. They also may not have the freedom to allocate the investments based on what they believe is right. They may have to use pre-established allocation models from these large organizations based on your age or risk tolerances and so on. Typically, they're not going to be a fiduciary simply because they have limited product offerings that they can make. They can be compensated through a combination of salary and or commissions. Now, an independent advisor is a little bit different. They're typically going to be self-employed, and they may even have other advisors working for them in the same office. They're going to have access to a multitude of different investment options because they're independent, and they're going to get individual licenses to utilize different investment products, again, based on the needs that their clients may have. As an independent advisor, they also may or may not be a fiduciary. Again, that is an issue on licensing. The independent advisor can be compensated through fees, or they can be compensated with commissions. Now, if you enjoyed this, I do have a more broad-based webinar that's 40 minutes that you're welcome to watch. It's right here on the page. Just put your information in and it will automatically start playing for you. It's going to cover Social Security. It's going to cover taxes. It's going to cover Roth IRAs, Roth conversions. It's going to cover virtually everything that you're going to need as you get into your retirement. You could also see my other short webinars at montinico.com/webinars. I also have some client videos that I think you'll find informative, and you can find those at montinico.com/retirement-questions. Okay. And lastly, if you've enjoyed this, please Share this with your friends and family. Retirement's a lot more fun when you can do it with friends and family.